What if I told you that the value of the money in your pocket, the price you pay for gas, even the future of your retirement could all be traced back to a single decision made in a quiet conference room in Brussels? Well, today, we're going to unpack how that one choice is starting a chain reaction that's reshaping the entire global financial system. Right now, in central banks all over the world, from Beijing to Riyadh, you can bet that the top financial minds are looking at what the West did to Russia's money, and they're asking themselves a very simple but also pretty terrifying question. And that one question, well, the answer is kind of unavoidable, isn't it? It's a yes. And that realization is kicking off a massive shift away from the US dollar. Because, look, if it can be done to a major world power, it can be done to literally anyone. So let's get into it. Let's break down exactly how that one meeting in Brussels might just be the first domino to fall, potentially ending the dollar's 80-year run as the world's go-to currency. Okay, so our story really kicks off on April 10th, 2024. For 2 years, the West had been holding on to $300 billion of Russia's money. Now, this isn't just cash, it's something called central bank reserves. The easiest way to think about this is like a country's national savings account, held in other currencies like dollars or euros. And on this day, the G7, a group of the world's most powerful economies, decided to do something with that money that pretty much rewrote the rules of global finance. So at first, freezing these assets was like putting a giant padlock on Russia's savings account. The message was pretty straightforward. Hey, end the war and you get the keys back. Russia couldn't get to the money, but it was still technically their property. But in April, a line was crossed, a big one. Instead of just keeping that account locked, the G7 decided to start taking the interest it was generating, about $3 billion a year, and give it to Ukraine. Now this is a huge deal. Freezing is temporary, right? It's a bargaining chip. But confiscation? That's permanent. That's taking the money. It basically says this is no longer yours and it never will be again. And boom, that was a signal. For every other country out there holding their savings in dollars or euros, this sent a really chilling message. Your money held in the West isn't actually yours. It's conditional. It can be taken away based on politics. And just like that, trust, which is the absolute bedrock of the entire financial system, was shattered. Okay, so that's the why. Now let's get into the immediate effect of this decision. We can actually see it happening in the data right now. Because when trust disappears, people and countries start to act. And boy, did they act. The reaction was swift, and it was massive. In just 8 months, central banks around the globe quietly dumped a historic $400 billion worth of U.S. government debt. Now, when we say government debt, we're talking about treasury bonds. Think of them as IOUs from the U.S. government. And this wasn't just a slow leak, it was a fire sale.
And here's what's really fascinating. Take a look at who's selling. Yeah, you've got rivals like China, sure, but you also have longtime U.S. allies like Japan and crucial partners like Saudi Arabia. This tells you it's not just about politics anymore. It's about risk. Everybody got the exact same memo. Holding dollars is no longer the safe bet it used to be.
So, where's all that money going? Well, countries are moving it into things that a politician can't just seize with a press release. They're buying tons of physical gold and storing it in their own vaults. They're diversifying into other currencies. And they're buying up real, tangible stuff like oil and copper. They're trading digital promises for hard, physical assets. Okay, so this brings us to a huge, and I mean huge question. For every seller, there has to be a buyer. If the rest of the world is dumping hundreds of billions of dollars in U.S. bonds, who in the world is on the other side of that trade? Who's buying them? Well, when foreign countries, your biggest customers, stop buying your debt, somebody has to step up to the plate, or the whole system just grinds to a halt. And that somebody is America's own central bank, the Federal Reserve. They are the one player in this game that can literally create money out of thin air to buy the debt nobody else wants.
And this, my friends, is where things get really dangerous. It starts a vicious cycle that economists have a scary name for: debt monetization. It's really just a fancy way of saying printing money to pay your bills. Here's how it works. The Fed prints new dollars to buy the government's bonds. But all those new dollars flooding the system make every dollar you have worth a little bit less. We call that inflation. Other countries see this, their dollar holdings are losing value, so they sell even faster, which, you guessed it, forces the Fed to print even more money. It's a spiral. And the numbers here, they are just staggering. Before this whole thing went down, the Fed was buying about 20% of new U.S. debt. Now, to fill the giant hole left by foreign buyers, it's soaking up around 70%. The Fed has gone from just being a player in the market to basically being the market. So let's zoom out for a second and look at the long game here. Because the cost of breaking trust, that's not something you measure in months. You measure it in decades. This timeline gives you a sense of the probable path forward. And look, it's not some overnight crash you see in disaster movies. It's more of a slow, grinding erosion of the dollar's power, all started by that loss of trust back in 2024. The endgame is a world where America can't borrow money on the cheap anymore. It's just like if your personal credit score got totally wrecked. Suddenly, everything gets way more expensive. Well, the same thing happens to a country. And in a global shift this big, you're always going to have clear winners and losers. The winners? Nations that prepared for this, and anyone holding real assets like gold. The losers? Well, America's ability to project power around the globe takes a big hit. But more directly, it's American consumers and retirees who feel the pain through higher prices and savings that just don't buy what they used to. In the end, it really boils down to this. The attempt to punish one country may have ended up shattering the very foundation of America's own financial power. For decades, the U.S. Treasury bond was the safest asset on planet Earth. By weaponizing it, they may have destroyed the very trust that made it safe to begin with. So let's just do the final math on this. The West got control over $300 billion of Russia's money. But in the process, they put at risk the trust that underpins the entire $30 trillion market for U.S. debt. For every $1 they went after, they risked $100 of their own financial future. It is a staggering trade-off with consequences that are going to play out for generations. And that leaves us with a pretty sobering final question. This isn't just about abstract numbers on a screen. This is about the real-world future of the American economy. When it costs way more to borrow money, how do you pay for things like Social Security, Medicare, the military? That free lunch the dollar status gave America for decades, it might be coming to an end. The story of the dollar is far from over, and you can be sure these changes are going to affect all of us in the years to come. If you want to keep making sense of these huge forces that are shaping our world, well, you know what to do. Be sure to follow, like, and subscribe for more deep dives just like this one. Thanks for joining me.